the Small Business Administration is declining many applications because people don't have at least a 570 credit score, according to SBA employee. And I'm about to show you how to fix that. Whether your credit score is not at 570, or you have bad credit, or you have other derogatory items that's stopping you from having the Small Business Administration approve your application for the Economic Injury Disaster Loan. I'm about to show you how people are having the Small Business Administration approve their applications by doing what I'm about to tell you. Now, if you got bad credit or you don't have a 570 credit score for any reason, what you can do is you can file for reconsideration with a co-signer, a co-borrower, someone that you can have pledge and attest that he or she will guarantee to pay off the loan if you can't pay it back. That's one way. Another way is to fix your credit. The way I fixed my credit, or actually enhanced my credit, was by ensuring that every credit account that reported to my credit file, I paid it down to where it only showed that I had a 30% or less credit utilization ratio. Your credit utilization ratio is the amount of money that you've charged on a revolving credit account divided by the amount of available credit on that same account. So if you have an available credit line on a credit card of $10,000 and you already charged $5,000, your credit utilization ratio is $5,000 divided by $10,000, which gives you a credit utilization ratio of 50%. You should pay that down by $2,000. You should only have a balance of $3,000, no more than that. So you could show a credit utilization ratio of 30%. Once it's over 30%, then your credit score starts to drop, potentially dramatically by 2 digits. So you don't want to have that happen. Some people, when they log into Experian.com, you'll see a credit utilization ratio for all your accounts. So for instance, you could have $100,000 in available credit, yet you've maxed out 2 accounts that, for $10,000 a piece. On those particular accounts that you've maxed out, you have 100% credit utilization ratios. So when a lender sees that, they're not going to want to lend you any money. They look at it and they're like, that's risky. This guy's probably living off of his credit cards. Although you have the rest of the available credit elsewhere, right? So what you can do is redistribute that debt. Perhaps perform a balance transfer to another account where you have more available credit, and just ensure that every single account has a credit utilization ratio of less than 30%. In fact, a principal scientist over at FICO told CNBC last year that the people who have the best credit scores, a credit score of 795 and higher, they have credit utilization ratios of about 7% or lower. So try to get it as low as you can. Some people are reporting that SBA has approved their application for economic injury disaster loan after they've paid down their credit utilization ratio on many of their cards to 1%. So pay it down as much as you can. But if you get it underneath 30%, by me getting my credit utilization ratios on every single account down to 30% and less, I was able to increase my credit score to 780 last year. That was the highest it's been in years. I've had it in the 800s previously, but once I got that, it was a lot easier for me to secure financing for several institutions for personal and for business credit. And it will put you in a much better standing when you file for reconsideration through the SBA for an economic injury disaster loan. You can have them repull your credit. Once it reflects, you may have to wait a couple of weeks for the lender to report to the credit bureaus that, yes, this is the new statement balance, and it reflects that, all right, if you have available credit of $10,000, now you only owe $2,500 or $3,000, right? Try to pay that off by any means necessary. Again, you can use a balance transfer option to another credit account. You could potentially pay yourself with another credit card and use those funds in order to pay down that credit card that has a credit utilization ratio of over 30%. Borrow the money from someone, and then once you get approved, then you can pay that person back. I mean, there are a few things that you can work in order to enhance your credit profile. And just remember, when you're working on your credit score, the Small Business Administration uses the Experian Vantage Score. All 3 credit bureaus jointly developed the Vantage Score back in 2006. You can access this Vantage Score by visiting nav.com, and you create an account on nav.com. It doesn't have to be a premium account for $39 or $29 or whatever. You can You can definitely see this. It'll generate your personal credit score, your Vantage score, with a free account. Probably have to verify your identity. It actually loaded a page for me reading that they could not verify my identity. I called them. It was real easy to get to them. And once you verify your identity, you're able to see your Vantage score. Everyone's telling me, everyone that's applying and that are securing approvals, and people even that are getting declined by the SBA are telling me that yes, the score that the SBA is telling them that they're using to determine that they were either eligible or not is the exact one that the people see on the Experian Vantage score on nav.com. If for some reason you don't want your credit to get any worse, if you're planning to file for reconsideration for an EIDL, if you can't pay off your credit obligations for any reason whatsoever, call your creditor and let them know, listen, the pandemic has impacted my business. Revenues are down. I can't make my payment this month. Can you offer a deferment? What kind of relief options can you offer? And they'll tell you. Perhaps they'll give you deferment where you don't have to pay for 2 months. They'll credit any late fees. And what many of these companies are doing is that they're labeling that account in a neutral status. Or sometimes it just reads in a declared disaster area, and it will not impact your credit. Now, keep in mind that the Small Business Administration is performing hard inquiries on your credit, meaning that the inquiries that the Small Business Administration is performing on your credit to view what your credit score is impacting your credit score. It shouldn't be by much, but some people have reported to me that it has been in double digits. So you have to also keep that in consideration when filing for an application through the economic injury disaster loan. So let me know, what has been your experience in applying for the economic injury disaster loan by perhaps getting a cosigner if you've used that tactic, or if you're planning to pay down your credit, or what are you doing? Or if you have any questions, leave them in the comments section below. If you want to see the timeline and everything that I went through in order to secure an economic injury disaster loan, go ahead and view my economic injury disaster loan playlist, to which I have linked below. Watch this video right here about the stimulus package and everything that public officials have lined up. Click the like button if you liked the video. Don't forget to subscribe. Talk soon.